Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson, Martinson Ag. We are seeing lower prices during the mid-session here with the exception of the cattle market. And Randy feels like crude oil's down really hard, almost $2 here at noontime, and feels pretty risk off again here today.
It does. I mean, we started on the defense and we just seem to be adding to it. The big one as far as the commodities are concerned is wheat's getting hit really hard, which is spilling over to pull down, of course, corn and even to soybeans to some degree. But yeah, it does feel an awful lot of risk off session here taking place.
You bet. Some money flow issues going on there. And in the wheat market, you mentioned that one down double digits, HRW. We've got some moisture that's coming into some of those areas. And so is that the main story or the main pressure that we're seeing, you think?
Yeah, I think it is. I mean, they're talking about seeing some moisture for parts of the driest areas of Kansas, Oklahoma, Texas, and that certainly is putting pressure on. They're talking also about these cold temperatures, but if it's snow and they're going to be covered, so it's very unlikely we're going to see too much winter kill with this. We also saw Texas's crop improve by 3% from last week, so now we're sitting actually with some in the excellent category. So the crop did improve last week. I think that's adding a little bit of pressure to the market.
Also, there's certainly talk about the Black Sea export deal maybe being extended, but what's your thought about that? Because Ukraine now has some different demands than it had previously.
It does. It's actually, starting to demand some new, some extra provisions as far as the agreement. One of them is they want it for a year, and then they want to get more inspectors. Both very reasonable requests by Ukraine. And I do think that, I think Russia will push back a little bit, but I think in the end they will sign off on it and it will be extended. I don't know if it'll be extended for the full year. It might be 6 months, but I do see that the deal will advance.
Yeah, Russia's got as much to gain by having the corridor open as Ukraine does.
They do. I mean, it's helping them. They're moving grain. It makes them look like they're at least, not just trying to be bullies to Ukraine, and they're going to let them ship some product as well. So, and they're also being able to move some product out of this at the same time.
Corn is down, and as well soybeans. Soybeans, are we seeing profit taking here today, or are we getting kind of caught up in the outside market, crude oil being down and everything else spilling over, or did we just work all the bullish news into this market from the South American perspective?
I think we've pretty much worked most of it into it. I mean, we've pushed this market pretty good. We've been holding up above 15 for quite a while. We do continue to see, issues with South America. Of course, Argentina, they continue to see their production numbers lowered, and they continue to be, with the frost, I think they're reversing some of that premium because they're not quite sure how bad the frost damage is going to be, if there is any. But also, we're still looking at rains in Brazil, which is slowing down harvest, but they're supposed to get an open week next week. I think that's putting pressure in on the market, and the idea that supplies are going to start to become available and our exports will switch over. China will start buying aggressively from Brazil here in a very short order.
Yeah, you'd start to think that we'd see some harvest pressure from Brazil here pretty soon. But technically, soybeans went up. I think 1554 was the high overnight. So we challenged last week's highs and couldn't take them out, right?
Exactly. And that is, I figured we could go up and try to test them. Since we didn't take them out, the market collapsed. I think it does show that, we are looking at the moving our exports, or at least the exports being switched over to Brazil. We're also seeing our basis levels widen out, and that tells us that Pacific Northwest bid is starting to dry up.
And as we mentioned, corn probably getting drugged down by the rest of the complex here, but we also have the USDA Ag Outlook Forum coming up here tomorrow morning. We'll probably get some baseline numbers on acreage, and market is kind of starting to brace for some higher acres, especially for corn, right?
Oh, exactly. Yeah. Right now, the average trade guess has corn acres up over 2 million. And so, yeah, I think that's what's kind of keeping the corn market a little bit sloppy. It doesn't help that wheat's down double digits and beans are down too. Corn can't go up by itself. And we're also seeing that, higher acres potential for beans, a smaller increase, but at least more higher acres. I think both of that is kind of weighing on the market. And that is the number that we're going to see right away in the morning, tomorrow morning.
Right. So if you get higher acres of wheat, corn, and beans, where do you pull them from, Randy?
That is a super good question right there, is where are these acres going to come from? And that's going to be the interesting part of what USDA says. I would expect that some of it's going to come out of some of the minor crops. Some might come out of cotton. But for the most part, up in the northern plains, we got a lot of different crops, and they're all trying to bid for it. So I think that's going to make things interesting as we get into the spring.
So the cattle market a bit firmer here. We actually scored some more new contract highs in some of the back months of the live cattle again. You've got early cash trades been higher. Boxes are on fire. Can we keep this market going here? Are we due for a little bit of a corrective setback at some point?
I think we're due for a little corrective setback. We've got the cattle on feed report that's going to come out Friday. Right now, the numbers look like they're going to be friendly, but I'm a little bit worried about what the Fed meeting minutes are going to say. That I think is going to be watched by a lot of the cattle traders to see what the intentions of what the Federal Reserve is going to do. We know that they're going to likely continue to increase interest rates, and I think the next one could be a half a point, which the market isn't going to take that very kindly. And I think that could help or add a little bit of negative to the cattle markets. Along with, if we do have a friendly cattle on feed report, I think that'll also bring in some selling into the market.
Okay. Buy the rumor, sell the fact, then, I guess is what you're saying. But weather, we're already working a little bit of that in, or do we have enough weather premium in with this storm that's coming as well, or not?
I don't think we do yet. I mean, we're looking at a couple days, probably the 3-day storm that's going to be hitting the plains, and it's going to impact different areas for different days, but it's still going to slow down cattle movement. It's going to slow down cattle performance. We're already seeing weights down. That, I think, will add to a little bit of the support for the rest of this week.
Hogs were up big yesterday following that big jump in the cutouts. They went almost the opposite direction on the close yesterday, erasing most of the gains. And so is the hog market seeing profit taking, or again, is it just the cutout values dropping again?
I think it's the cutout values. There's not much profit in a lot of those trades, so I think it's more on the cutout side. The hog, that market has been getting beat up pretty bad, and that's also another thing that's going to impact the cattle markets. Is if we continue to see cheaper pork prices, you've got competing meats, and that's the direction most of the consumers will go.
Yeah, and I think we've had some cattle hog spreads on certain days as well. We'll watch that. All right, thanks for joining us, Randy Martinson with Martinson Ag, and that is Markets Now.